Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your Cannabis Business Podcast. Looking at the cannabis sector's year-to-date returns and valuations from Viridian Capital Advisors, kind of breaking down the cannabis industry into 12 subsectors, looking at some capital raisers, mergers and acquisitions, valuations, credit analysis, all of that. Diving into first, four key subsectors for biotech, hemp, ag tech, and then cultivation retail, looking at how the top companies in each one are being valued and how they've performed year to date. The highest returning sector is biotech pharma, which had an estimated 13% gain year to date. When you take away the GW Pharma's $7.2 million deal in the first quarter, the sector has shown some declining activity in the mergers and acquisitions. There's a strong 11.5x enterprise value to revenue multiple that's consistent with the low revenue, high IP value nature of the business. Strong valuations are great, but I think a lot of this has to do with speculation and just people realizing their purchasing power is going down and trying to have it to gamble more and more risks. That's what I think a lot of that should kind of come back down to normal at some point, maybe. I don't know. A lot of people are already looking at hemp kind of coming back down to normal. It was actually the lowest returning sector at an approximately 45% loss year to date. None of the five companies that Viridian is tracking exceeded 36% year-to-date loss of the Charlotte's Web. So they're the worst ones. Merger and acquisition is up slightly. There's 31 transactions compared to only one last year, but fundamentals are lagging. So CBD sales and retail haven't bounced back prior to pre-COVID levels, and there's a 0.9x enterprise value to revenue multiples, reflecting that slow growth expectation. With agricultural technology, the consolidations made evident by the $653 million year-to-date M&A consideration targeted at the sector. Those stocks have been punished by the slowdown in the cultivation, impacting several Western states, including Nevada and California, leading to a 24% year-to-date loss. That's got a 2.3% EV to revenue multiple, second lowest. Cultivation and retail, still down about 7% despite the sharp rally over the last couple of weeks. So it might be some pretty good opportunities there. That's the second, third tier players of that sector with a 3.7 EV to revenue multiple, all of which could be benefited by, Safe Banking Act or legalization. With the 280E out of the way, people will be able to do something as simple as writing off employee taxes, making their balance sheet look a lot better. So a lot of opportunities there. It looks like year-to-date returns are mixed. So it makes it a little bit difficult when you just kind of try to target a portfolio or ETF or index because it's a mixed bag. It's going to basically look like you're moving flat because there's some winners and losers in there. So it's kind of hit and miss, but it looks like obviously the overproduction of hemp is decreasing that. Maybe the other cannabinoids will have a higher margin and they'll be able to recoup that down the line with CBG, CBN. We'll find out. With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.